Good morning, everyone. It is Thursday, February 10th, and this is Morning Market Movers, where we look at hotspots in the markets for the day and do some live analysis for day trading. My name is Todd Rich. I am with Nadex. With me, Brian Caprice from Keep Trading Simple. We do have quite a bit to talk about this morning. We are going to be talking about equities. We're going to be talking about uh, metals, gold, and we're going to be talking about foreign exchange. We got to go around the horn a little bit. We just had our CPI numbers come out. We're getting another measurement of inflation, and CPI year over year, 7.5% increase. We've got the highest inflation in 40 years. And yes, the markets are reacting. Initial reaction, markets all sold off on that news. We saw gold sell off, and we obviously saw dollar strength because the Fed is going to be forced into doing something. All right, so that's the top line. Before we jump into it, I do need to share this disclaimer that trading involves risk. It may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We're doing this for your education purposes. I mean, you could actually see here, I just threw up the chart quickly of the NASDAQ. You can see the immediate reaction from on the markets. We were all slightly in the green or flat, and now everything's down about 1%. Interestingly enough, though, because we did mention this also, we're in the middle of earnings season. In the backdrop of that, we are seeing isolated spots in the equities markets where we see the economy's recovering and stocks are doing companies are doing incredibly well. Two examples would be Disney and Uber. Absolutely blew it out. Disney's been getting hammered lately. Absolutely blew it out. Stocks up, I think, 7-8%. Uh, uh, just a really strong rebound, and that'll help support the Dow a little bit. But we're seeing the Dow down. You saw Uber take off, also blowing out its numbers. And the reason I mention those two is because, I mean, obviously people are getting back in Ubers. We're getting closer and closer to the end here, and getting a glimpse of what life might be like, or like what it used to be like. Disney blew out its numbers. Yes, their subscription numbers were good, but what was amazing is where they're making all their money is back at their roots. People are going to the parks, and so uh, that is all encouraging while we have this horrible inflation number. So, Brian, I'm going to flip it over to you, and let's run through the equities. Let's run through quickly on metals, and then let's take a look at the
Yep.
FX because the dollar is just seeing some great strength this morning.
Yeah, and it's interesting that you mentioned that too, because just Disney with getting back to the roots. I mean, that's something that we saw across the board. In person, type amusements and things like that basically disappeared. But the larger companies, everybody's getting into streaming, and the future is streaming. I mean, you see kind of what Netflix does. I saw today, I guess the deal between Warner Brothers and Discovery now has been approved, that those are joining forces. So I mean, everything is going into that digital space, and then it's kind of, if you were able to survive in the digital space, and again, Disney's done a great job of it with all the series and everything that they've done. I mean,
Disney
between, what was it?
Plus, yeah.
Yeah, Disney Plus. I mean, I have Disney Plus, but yeah. So I mean, between like Loki and the Mandalorian and all those things, it's again, it's awesome for them. I mean, earnings wise, again, now that became your main revenue source, and now you're going back to, again, Disney, where you get off the plane there and your credit card just starts chiming like a gas pump.
I want to go back to a park to tell you the truth.
Water, cha-ching. Yeah, it's like, here, kids, put this on, and you can buy anything you want in the park. And mom and dad are like, what? Yeah, it's crazy.
Yeah, well, I give you another 2 years, and yeah.
Nope. I did it. Did it when the boys were little, and I was like, "This is not that great." So no, I wouldn't go to Disney. I'd go to like Universal, and those things are pretty fun. So
I'll take Jen to Disney. I'll take Jen to Disneyland.
Yeah, the signing of the Princess book is not for me. So anyway, so this morning, couple interesting headlines besides the CPI out there. Bailey was speaking this morning. The CPI numbers, I don't know. Again, I don't. Bostic, maybe he it plays on his phone during the meetings. I'm not exactly sure. He makes comments about we're on the cusp of it disappearing, and the forecast that it was going to reduce, but it did the exact opposite. It actually went higher than what it was last time. Now, I didn't expect it to go higher. I expected it to be the same as it was last time. I expected there wouldn't be a drop. but I didn't expect the reduction. But the fact that it's even increasing even more just goes back to the fact that the Fed has to do something. It's nice that yesterday he wanted to talk about I'm on board for 25, but that's it. But maybe some more. Jamie Dimon mentioned this last year, and I've been saying it for months that I think they're going to do the 0.5. They're getting to the point where they have to. The more inflation goes farther and farther and farther, it's hurting people a lot more. And remember, there's a difference between the economy and the stock market. The economy is going gangbusters. Even in a time right now where they're like, oh, yeah, our revenue is lower because of supply chains, but we've made more money than we ever have.
Yeah.
Okay, so raise the interest rates. What's it going to? I mean, if they already had the supply chain issues and COVID is basically disappearing, everybody's, it's no longer a pandemic. It's going back into endemic status, and it's becoming like the flu. And they got to do something. They got to do something.
And they have
again,
to do something because the increases in wages that we just got, the whatever 3-4%, that's entirely wiped out. And I mean 7.5%. I mean, this is a problem.
Well, and that's the thing. I mean, again, if you think about the people that need this the most, it's the lower income families, right? I mean, things like Social Security. Yeah, there was an adjustment in Social Security, but was the adjustment on par with what the cost of living adjustment is based off of inflation? It's not even close. So, I mean, the people that need it the most are getting hurt worse and worse and worse and worse and worse. So, again, this 0.6 number is a big thing you're seeing in the charts. The other news headlines today, it was the UK talking about how basically, where is it right here? UK Minister Trust says, Lavrov told me Russia has no plans to invade the Ukraine. I mentioned that yesterday. Like, if you're going to invade, you don't tell people you're going to do it first, but you could use it for other things. Again, it's like it's political maneuvering, as well as, again, you can kind of tweak the market if you want, right? With no repercussions. Hey, we're going to send troops. We're going to pull them back, right? So, I don't think there's going to actually be an invasion. Again, everything is adjusted accordingly. So, starting off with the indices, yesterday we were here. We were sitting right here. Sorry, guys. I was up with the baby most of the night last night, so my brain is like half fried. But this is the yellow dot is where we were yesterday. We talked about the 45.84 being at the peak. It was a tested level. You can see it came up, and then what did it do? I mentioned yesterday. Look to see what the market does early morning, and that'll tell you what's going to happen. And you can see starting right, and it's the same for all of them, but I'll do the extra work on this one. There's 3 o'clock. So what did the Europeans do? Now, again, we don't share our data with them. They didn't know about it first, but the market has typically a general idea, and they got their pulse on it. The Europeans did nothing but send the price higher, higher, higher in the ES, right? It went right into that level, and then what happened? News came out, bam. Absolutely just crushed it to the downside. Again, pre-positioning. NQ, same exact setup. What did it do? Europeans drove it up into a level that was tested. Again, basing level, drop, test. What happened? Bam, slammed it to the downside, and this is a pretty big one, too, for the NQ. It didn't get all the way up there, but it given us a new level. Just this first spike is a 1 to 5.5. That's a huge trade. No, that's a huge trade. Your 1 to 3 is sitting right there. Right? Again, YM looks exactly the same. The level we talked about yesterday was the 35,743. You can see that is a tested level right here. Again, we just threw a dotted line about it over it. It was a drop into a level of basing, strong push. And what did it do? It went right back to that level. Here was your base yesterday at 430. Here was your touch in the European session, and it came right back up before news. Bam, crushed down again. Russell, same exact thing. Now, Russell's was a little bit off, but again, the same idea, right? We had a level of basing right here. It ran right up into it, and then the news came out. Boom, crushed back down, and is now slowing down. So all the indices are kind of the same thing. And again, they're justified. It's justified to do this. Rising interest rates, it technically does hurt the stock market. It makes lending and things like that more expensive.
And it makes other assets more attractive, right?
Yeah.
At some point, you'll be able to put your money in an account and actually earn interest.
Yeah. Yeah, absolutely. But again, these are all these. You got to understand these things. That's what we mentioned earlier in the week. That getting short this pre-market would have been a really good thing. Now, oil, no reaction whatsoever to it. Gold, I think, is important to note, and I'll remove this so you guys can see the candle. Good. We talked yesterday about this 1833. You can see right now that literally it came back up and grabbed that. I can do it on a 5-minute.
Maybe wow, you can see it a little gold bit better. Has actually got a green candle right now.
Yeah,
what a
slightly
cuckoo trade.
Slightly.
Oh no,
yeah,
now
it's the whipsaw. You can see that it drove down, it came back up, and now it's pulling back down again. And this is again, the gold market's a little bit different. The initial response is, "Oh my God, this is bad. Sell," and it started to go down, and eventually it was like, "Oh my God, we got to get these people out." We're able to stop them all out here, and then they were able to go back in again. So again, 5-minute chart, a little bit harder to read on this one, right? But again, you can see it's a red candle. Right. But look at the spike in that one from that level. So it was an area of sellers, and you can see it just came up. So looks very, very similar. If you wanted to do a nearer term level, you can say right there. And again, this is great. This is the whole reason why it's great to trade this with Nadex. If you had shorted this here with a futures contract, right, when it went back up here, you just lost a lot of money. But it ended up whipping all the way back down again with Nadex, and you were fine. So again, gold, pretty normal, right? And again, I would expect this to kind of flounder around as retail traders are trying to get involved with this one. The reason why gold is a little bit more challenging is people are like, oh my God, the inflation is 0.7. We got to get in this, right? Inflation, you got to buy it. Understand, it's already too late.
Yeah.
You should have already been in. The hedge is gone. Now it's talking about crushing the hedge. So again, this will confuse a lot of people. A lot of people see that number and like, I got to buy gold. I got to buy gold. I got to buy gold. But it's really more of an opportunity to, and again, you can see it here.
To get
Grand
out of
scheme
your
of
gold
things, to drop.
positions. Yeah.
Yeah. Again, everything we've showed so far, here's the pound. Okay. Pound had the same thing. European session started right here.
Oh, the pound
And what
dollar.
did they do? They drove it back up into a 30-minute level. It was a base, a drop, a base below. It came lower. Again, that little kind of Harry Potter motion. Came up and tested it and then shot right back down again. And this level was formed yesterday morning, right? This is 9 o'clock. This is exactly what we were yesterday. So we couldn't draw that level. This was something we drew last night. Came right up. And what did it do? Right here at 8 o'clock, pushed into a level pre-news. This move right now, let's see, 55 pips. So go look at your short duration binary contracts and see how many strike prices just got blown through on the pound dollar. And then you can tell me that news trading isn't worth it. Dollar yen, the same thing. What did dollar yen do? I talked about look for the pullback. Europeans started here, right? They pulled it forward. And what did they do? They pulled back before news, right? This is the pullback before news. Again, if you want to get long, get in early, right? Get it on sale. But there was the pullback. Explosion forward. Dollar Swiss, explosion forward. Dollar CAD, explosion forward from a level of basing. So it's basically the same thing on every chart. The euro,
that
here was
dollar
the euro
yen
chart
went
from
through 10 binary strikes.
yeah, here's the euro dollar. And again, euro dollar has the smallest strike width of all of them. I'll remove this and check this out. There's your thing. I even had the news drawn right there. Talked about this level yesterday. Talked about getting short, and this one from I guess really from the 8, 60 pips. So look at how many strike prices that went through. This is why every day, every Tuesday when we go through our afternoon analysis, I go through news. I sometimes get questions like, "Why do you go through the news?" This is where trading opportunity finds itself, particularly in a week where there's absolutely no news in there. I mean, this was already at a level. Even if there was no news, we would have been looking to get short from this level. It acted as a catalyst and just absolutely just drove it. I mean, it's easy, guys. So these are the opportunities you got to look for on a daily basis. Now, I do like this one. We do have a racetrack here, so I wouldn't be surprised if this continues to push lower. There will be some battling back and forth right now, but I would say euro dollar short today is probably pretty decent. The one thing that's providing strength for the euro is the fact that, again, with Russia, it seems like the odds of them actually truly invading are getting less and less and less, which is bringing a little bit of strength to the euro. But again, overall, great little move, and we'll see what the rest of today kind of unfolds. Unemployment was a little bit down too, but not enough to really signify anything different.
Nothing to talk about for it impacting the markets. All right. Well, that was quite a bit. A lot to cover today. Any questions for Nadex, please email us, customerservice@nadex.com. I'm also available. You can catch me at todd.rich@ig.com. Brian is also available. If you'd like to reach out to Brian, please feel free to email him, support@keeptradingsimple.com. Again, what we kind of covered through today, that CPI number, it not only was it just we were looking for steady or maybe a decrease, it just exploded. 40-year highs, 7.5% on the CPI number on an increase. Inflation is definitely going to be what everyone's talking about today. To counterbalance the positive earnings news from some of the bigger stocks or bigger names like Disney and Uber, certainly inflation is going to play a much larger, broader role. And we're seeing that across the board. We're seeing the equities all started to sell off. We saw gold go haywire. And then, of course, the dollar strength across the board because the Fed's going to have its hand forced. Of the 25 basis points in March is got to be pretty much a lock. And now 50 has got to be on the table for sure because they have to do something. That's what we got for today. Thank you so much for joining us. Brian and I will be back again tomorrow morning to wrap up the week. If you like what we're doing, please give us a like. We always appreciate that. Brian and I will see you tomorrow, and good luck in the markets, everyone.